What's up, YouTube? My name is Ty, financial professional. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is BBBY, Bed Bath & Beyond. This finishes at $7.91 today. That is up 12.36%. So we've been covering this stock for 2 months now, ever since this initially squeezed. This went from the low of $4.40 all the way to the high of $30, which was over a 580% upside. So epic short squeeze there, but this was obviously not going to end well, as with every short squeeze. So near the top, Ryan Cohen took a giant dump on the apes, unloaded his entire stake. This pulled back all the way to the $8 range. And then we got some bullish news. The company got a $400 million loan. There were rumors of bankruptcy, so that cleared up those rumors. So a mini recovery there. But unfortunately, that was a dead cat bounce. Last week, we got the strategic update where the company announced layoffs, store closures, a share offering, and an executive team shakeup. So very bearish news there. The stock sold off back to the $8 range. And then over the weekend, we got some more bearish news about the CFO deleting himself. So not sure how much of an effect that had on the stock, but it definitely was bearish. So it came all the way back down to the $6 range, and today, the stock is pumping. And really no reason to justify this price action today. There's no news. So very odd. This was number 5 on StockTwits today. Had 2,300 mentions, so once again, we're going to analyze it. Okay, let's jump right in. Let's go ahead and analyze here. So first of all, we have a cup and handle in the making. Bottom of the cup being the low of $4.40, and there can be multiple possible tops. It can be $15.30, $20.90, or $30. And longer term, this is part of an even bigger cup and handle where this has the potential to go all the way back up to $53.90, the high. Although I do believe the most realistic top would be $15.30. But those are all bullish indicators that is telling us that the stock should come back up to one of those tops to complete the cup. The RSI, the relative strength index, is currently at 45. Pretty average RSI there. A little bit below average. So according to the RSI, the current price of $7.91 should be a little bit higher. So the RSI is currently a neutral to slightly bullish indicator. And then we have a triple gap down. First gap down was back at $11.50. So that's a bullish indicator that is telling us that the stock should come back up to $11.50 to fill this gap. Second gap down was back at $16.15. So another bullish indicator that is telling us that the stock should come back up to $16.15 to fill this gap. And the third gap down was back at $22.50. So another bullish indicator that is telling us that the stock should come back up to $22.50 to fill this gap. And it may be a while before those gaps fill, but eventually in the longer term they should. And now for the bearish stuff. So there was also a gap up back at $6.50. So that's a bearish indicator that is telling us that the stock should come back down to $6.50 to fill this gap. In the aftermarket here, this is pulling back down to $7.80. So if this aftermarket action holds, that would be a bearish indicator for tomorrow. That is suggesting that tomorrow the stock will sell off. Here we had an ascending channel where the upper channel was at $19.50 and the lower channel was at $14.50. So if this broke $19.50 to the upside, that would be bullish. And if this broke $14.50 to the downside, that would be bearish. This did in fact break $14.50 to the downside. So the ascending channel is a bearish indicator. Here we had a bull flag developing, which was a bullish indicator. Unfortunately, the bull flag got rejected, and it's now a bearish indicator. And here we did have a head and shoulders. Here was the first shoulder, back at 30 was the head, and recently the second shoulder formed. So that's a bearish indicator that is telling us that the stock may be due for a sell-off. And it is in fact starting to sell off. And down here on the MACD, the moving average convergence divergence, the MACD line is pulling away from the signal line to the downside. So that's a bearish indicator that is telling us that it may be time to sell. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is sitting on the support of $7.95, which it finished around today. So if this goes to the upside, next levels of resistance would be $8.15, $8.55, $8.85, $9.20, $9.40, $9.65, $10.15, $10.55, $10.90, $11.25, $11.70, and then $12. There is resistance above $12, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be $7.50, $7.15, $6.95, $6.65, $6.40, $6.10, $5.85, $5.50, $5.20, $5, $4.75, and then the low of $4.40. So right now at the current price, $7.90, the channels to the upside and the downside are very wide. So expect significant price action either way this goes. However, if / when this breaks $7.15 to the downside, the channels start to narrow. So expect a significant decrease in price action if / when this breaks $7.15 to the downside. And this did 42 million in volume today, so very significant volume, way above the average of 13.5 million. So this pump today was confirmed by the volume. Okay guys, just my opinion. not financial advice. So yeah, this was an epic short squeeze, and I hope you apes took your profits, because this was not going to end well. Short squeezes never do. Diamond hands is not the way. Gotta hit the sell button. And for all the bag holders, sorry for your loss. Use this as a learning lesson for next time. So there's been a lot of drama with the stock in the past few weeks, but it looks like things are finally starting to cool off, and the stock is now trading around fair market value. So long term, the stock looks bullish. This will definitely have its day again at some point, probably during the next meme mania. But for the time being, in the short term, there still appears to be a bit more downside to go. Again, we have bullish indicators in the cup and handle, triple gap down, and RSI. And again, we have bearish indicators in the gap up, ascending channel, head and shoulders, rejected bull flag, aftermarket action, and MACD. So way more bearish indicators than bullish indicators right now. So therefore, if you want to go long, not financial advice, the current price of $7.90 is a pretty decent entry. Very average entry here, especially if you're going to buy and hold for the long term. Again, this should eventually come back up to $22.50 in the longer term to fill the gap there. And from the current price of $7.90, that would be about a 185% upside potential. So massive upside potential here in the longer term. And again, this should come back down to $6.50 to fill the gap there in the short term. And from the current price of $7.90, that would be about a 20% downside potential. So I would say going long at the current price would be a medium risk, very high reward play. Definitely worth a shot, in my opinion, especially if you're going to buy and hold this for the long term. So $7.90, definitely not a bad entry at all. But honestly, if you're a bit patient, this should come back down to $6.50 to fill the gap there. And I think that would be an excellent entry. So from $6.50 up to $22.50, that would be over a 245% upside potential. So massive upside potential there in the longer term, and really shouldn't go too much further to the downside. So I would say going long at $6.50 would be a low risk, very high reward play. Definitely worth a shot, in my opinion. You really can't go too wrong there, buying in at $6.50. So I can't support going long at the current price, $7.90. And if it pulls back, then you can just average down at the supports that I mentioned before. But personally, I would set the buy orders to $6.50. So whether you decide to enter here at the current price or lower, it should pay off pretty big in the longer term. Now, if you want to go short, not financial advice, that seems like a pretty decent play. You should be able to make a decent amount of money here to the downside. It's just a bit risky. Again, in the longer term, this should come back up to $22.50 to fill the gap there. And from the current price of $7.90, again, that would be about a 185% upside potential. And again, this should come back down to $6.50. And from the current price of $7.90, that would be about a 20% downside potential. So I would say going short here at the current price would be a very high risk, medium reward play. So it's not the greatest entry, but there is still a decent amount of money to be made here on the downside. Just be careful. So if you want to go short, please do that at your own risk, and it would definitely have to be for a quick scalp. Get in, get your money, get out. So as long as you're able to withstand some upside pressure here, this should come back down to $6.50 to fill the gap, and that should be some pretty decent money on the downside. So I can't support going short at the current price, $7.90 and higher, and again, I would cover at $6.50 where the gap is, and that should be a relatively easy 20% downside gain. So congratulations to everyone who made money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is BBBY, Bed Bath & Beyond. Thanks everyone for watching today. I appreciate you guys. Please like the video, please subscribe, and catch me every weekday after market close on The Smarter Gambling Show. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.